Before we jump into marginal tax rate, let's understand one concept, a flat tax rate. For example, in this graph, you will see a 15% tax rate for all income level. For example, if you make $50,000, the whole $50,000 will be subject to 15% tax. If you make $100,000, you will subject to the same 15% tax for all portion of the income. This is a flat tax rate. However, for US, the income tax is a progressive tax system. What that means is that there would be different tax rates depending on the income that you have. For example, maybe the first $10,000 is subject to 10% tax rate, and then from like 20,000 to 30,000, it will be subject to 14% tax rate, and then from 30,000 to 50,000, it will be subject to 18% tax rate. For marginal tax rate, what we mean is that for additional $1 that you make, what is the tax rate that you'll be subject to? So for example here, if we make $50,000, you will be subject to 18% tax rate. If you make additional $1, which is $50,001, that $1 will be subject to 18%. Similarly, if you make $100,000, the first portion would be subject to 10%, and then the second portion would be subject to 14%. The third portion will be subject to 18%, and the last portion would be subject to 25%. So for any additional dollar that you make, for example, if you make $100,001, your marginal tax rate is 25 because that additional $1 will be subject to 25% tax rate. And then we have another graph here, which is plotting from your income against your total tax pay. If it's like flat tax rate, like 15%, if you make $50,000, you pay 15% for the entire portion, which is $7,500. If you make $100,000, you pay the entire portion at 15%, which is $15,000. So how does it look if you make 50,000 and 100,000 under a progressive tax system, which means different portion of income is subject to different tax rates? Let's see how it works. You will see this is like a curve that will be increasing faster when you're making like more money. If you make a $50,000, you will pay $7,600. And if you make $100,000, then you will pay a $21,000 tax. How does it make sense? If you go back to this graph that shows income against your tax rate, the area under this portion is the amount of tax that you pay. If you make 100,000, you will pay all these taxes. So the area that is under this yellow curve graph or orange curve graph is the amount of tax that you pay, which is higher than the area that's under the blue line. So marginal tax rate is the tax rate that you will pay for every additional amount that you make. Here we have 2020 marginal income tax rate, and this is the marginal tax rate for different income level. And if you're like a single person or a person that's filed like a single person, then you will subject to this income level. If you are married and decided to file like jointly, then you would be subject to different income level. So for example here, $9,875 will be subject to 10%. And then for anything that is above the $9,875 to $40,125, then you will subject to 12%. And then the 22% will be for income that is between $40,125 to $85,525. And these tax brackets will change depending on the year. And you can always find it from the IRS website, which I put information here.